Good morning, dear students. So now let us start with the next part of the topic under IFS. So it is about the investment policy of commercial banks. We have to learn about liquidity and profitability. Hello. मुझे लगता है क्या? Oh. So we have to talk about the concept of the investment policies of commercial banks by considering liquidity as well as profitability. Yes. Dear students, as I was telling you in yesterday's class, I was mentioning to you about commercial banks. I told you about the importance of commercial banks. I was telling you about what are the objectives of commercial banks. So we saw about what are the different types of functions that have been performed by commercial banks and so on. Now in today's class, let us see what are the liquidity profitability functions that are performed by the commercial banks. Okay. Yes. See, the primary aim of any commercial bank is, of course, to earn profit. So, you know that commercial bank also happens to be an institution, and this institution also has a main aim of earning profit. But the ability of a bank to earn profit depends upon the investment policies. Yes, dear students. That means to say, now you know that one of the main aims of the commercial banks is accepting of deposits and lending of loans. So now what a bank has to do is, you know that its main objective is to earn profit. So it should be in a position to invest money. So only when it has a proper investment policy, it will be in a position to earn sufficient profits. Now, the investment policies of a bank depends upon the manner in which it manages its investment portfolio. Dear students, there is one concept called as portfolio management. Okay. Now, portfolio management of a bank is mainly with regard to the efficient management of assets and liabilities. Yes, you know that a bank has assets as well as liabilities. So it is the responsibility of the bank to manage the assets and liabilities in a systematic manner. Okay, only then it will be in a position to survive, it will be in a position to make sufficient profits. Okay, now there are three main objectives. There are three main objectives of portfolio management. What are the three main objectives of portfolio management? Of course, the first one is safety, the second one is liquidity, and the last one is profitability. Yes, dear students, for any bank, it is very, very important for them to give importance to liquidity, profitability, as well as safety. Okay. Now, see, as I told you, safety, liquidity, and profitability happens to be a very important objective. Now, dear students, when you use the word liquidity, I told you that it must be possible for a bank to easily convert. I mean, it must have sufficient amount of cash with it. Now, wherever the depositors come to the bank and when they demand money, so the bank must be in a position to pay money towards the customers. Now, when it comes to the safety and security point of view, dear students, I told you that, see, any investor for that matter, why do you think an investor will be depositing money in a bank? Now, the intention of a depositor to deposit money in the bank is that he knows that once he deposits money in the bank, the money will be safe. Okay, and he knows that he will be able to earn some amount of percentage of return. But the most important point is safety of money. Now, why do you deposit money in a bank? We want that money to be safe. You know that in case you keep a huge sum of money. Okay, so you know very clearly that in case a bank is able to, I mean, sorry, if an individual is able to have a huge amount of money, what is going to happen during that time? during that time you will be having a fear that somebody may come to your house and they may take away the money that you have kept in your house. So rather than that, if you want to have a peace of mind, the best way to have a peace of mind is you can think of depositing this money in a bank. So once the money is deposited in a bank, it is the responsibility of the banker to provide safety of the money that you have deposited. Next point, dear students, liquidity. Okay, now I was telling you, now this is again very much there. All these concepts are very much there in your study material. So when you use the word liquidity, please keep in mind commercial banks should also take up the responsibility of maintenance of liquidity of funds. What is this liquidity of funds? Now let us say you have deposited 5 lakh rupees in a bank, okay, and it is a savings account. Now let us assume that tomorrow when you go to the bank, what is the expectation that you have? Your expectation is that the bank should be in a position to give you the money whenever you want to withdraw the money. So liquidity is nothing but the commercial banks must be in a position to maintain sufficient amount of cash in order to make payment to the customers as and when there is a demand for it. Okay. So whenever the customers go and demand for the money, it must be that the customers should be able to get the money from the bank, and that is why the commercial banks must maintain sufficient liquidity of funds. And not only that, profitability, dear students, yes, in case a bank has to survive, if it has to be reputed, then the bank must be in a position to make sufficient profits. And how can a bank make sufficient profit? The bank can make sufficient profits, first of all, when it is providing very good services to the customers. Okay, so they should provide proper facilities to the customers. Whenever the customers come to the bank and to withdraw money, immediately they must be in a position to give them that money. Okay, so only then a bank can survive, and only then the bank can attract the customers. Okay, so dear students, please remember the three main activities that the bank has to think about is providing safety of funds in order to ensure liquidity, and also to provide profitability and to earn sufficient profits for the business. Now dear students, one important question from your exam point of view is that, okay, there is an important question which can be asked from the exam point of view, and that is with regard to factors affecting liquidity of a bank. Now, I told you that liquidity happens to be a very, very important concept. Now, what do you mean by this liquidity? Liquidity, as I already mentioned to you, it means to say it is ready convertibility into cash. That is easily, it should be possible to have sufficient money so that whenever the customers come to the bank, they must be able to get the money. Okay. Now, dear students, this question is important. The question is, what are the factors that is affecting the liquidity of a bank? Okay. So now I told you liquidity means a bank should have sufficient money with it. Whenever the customer demands the money, the bank should be in a position to repay that money to the customer. Yes, of course. Not only that, the bank should have sufficient money even to give loans to the customers, right? Now, when you go and approach a bank for a loan, even then the bank should have sufficient money. Now, what are the factors that decide the liquidity position of a bank? The first one is banking habits of the customer. What is this banking habits of the customer? See, if in case, assume that the customers in a bank are making use of e-banking services. Now today you know that e-banking services is becoming more and more popular. So your people, rather than going to the bank and carrying out the transaction in the form of cash, what do you people do? With the help of e-commerce transaction only, most of the transactions have been carried out. So please keep in mind, in case the customers of a particular bank are carrying out more and more of e-banking transactions, the bank need not keep large amount of cash with it. Why? Because anyway the transactions are happening online, so you need not have hard cash with you. But on the other hand, in case the customers of a particular bank, they are more used to physical transaction, that is coming to the bank, withdrawing the money, depositing the money. If they are more and more used to non-e-commerce transactions, then the bank should have to keep a huge amount of money, okay, in the form of liquidity. And dear students, the next question point is the structure of banking. Dear students, if a bank is having a number of branches, okay, now you know, for example, a bank like SBI, it will be having thousands of branches. So if so many branches are there, then it need not have too much of cash in its hand. Why? Because even in case they don't have sufficient cash, they can definitely go and take the money from its other branch, okay, if there is an emergency. But on the other hand, in case of unit banking, that means to say, if any bank does not have more number of branches, if there is only a single branch, then they have to keep huge amount of money for the reason that it will, whenever the customers come to the bank, they must be in a position to meet their requirements. Okay, so and also it depends on what type of deposits have been kept by the customers with the bank. Okay, now see, in case the customers have kept more of fixed deposits, okay, with the bank, then with few amount of money only they can manage the business. Why? Because you know that in fixed deposit account, the money has to be repaid to the customer only after the expiry of a certain period of time. But let us say your bank is having more number of savings deposit holders. If you have more number of savings deposit holders, definitely you should have huge amount of cash with you, because you know that as per the savings account, any number of time the customer can come and withdraw money. And let us say you're having more of current accounts, you have to have sufficient money for meeting the requirements of the customers. So, dear students, I was telling you about liquidity. So, liquidity is nothing but the money that the bank should have in the form of cash. Okay. So, what you need to remember is that, so how exactly the bank can decide about how much money is required. One is about the banking habits of the customers. Okay, so in case the customers of a bank are using more of e-banking transaction, then the bank need not keep huge amount of cash. But if it is not using e-banking facilities, then huge amount of cash is required. Then coming to the structure of the bank, I told you that, see, in case of branch banking, if your bank is having a number of branches, then it can readily keep lesser amount of cash, because even in one branch, if there is a shortage of money, they can always borrow money from its other branches. Okay. And then, dear students, again coming to the concept of type of deposit. Okay, so in case there are more number of savings and current account holders, the bank will have to keep huge amount of cash, or a huge amount of liquidity will be required. Whereas on the other hand, if it has more of a recurring and fixed deposit holders, then they can keep less amount of cash with it. Then, dear students, talking about type of depositors. Okay, so one more factor which affects the liquidity position of the bank is what type of depositors that a bank has. For example, if the depositors of the bank are business firms, if there are schools, colleges, then the bank has to keep huge amount of money. Why? Because see, bank, I mean, in case schools are having an account with a particular bank, let us say a school has an account with the Canara Bank. So what happens, that school is an institution, okay, wherein huge amount of transaction will have to be carried out. They may have to pay salary to the teachers, okay, they have to carry out some, let us say, some workshops, programs they'll have to carry out. So you never know when the demand for cash will be there. So, in case the bank has a number of sorry, business firms, if it is having schools and colleges are having account with that particular bank, then the bank will have to maintain huge amount of cash. Okay, but on the other hand, if it is individual customers, okay, it is okay for the bank to have a little bit less of cash, because institutions, firms, they need huge amount of money and they may demand it at any time. And then, dear students, coming to the next point, the nature of advances. Okay, The nature of credit provided by the bank will also affect the liquidity position. Okay. Now, whether you're providing loans, what type of loans you are providing to them, what type of overdraft facilities you're providing to them, all that will also have an effect on the liquidity position. Because whenever you give a loan, you should be in a position to get the amount, okay, properly, because only if you get the money in the form of equated monthly installment, only then cash will be there with the bank, and the bank can think of paying the money back whenever the depositors are going to demand for it. Okay. Then the seasonal requirements. Yes, dear students, see, sometimes what happens when, now let us say, if the economy is in a very progressive stage. So if the economy is doing well, what will happen? Lot of money will be required. People will need money. They'll be withdrawing more and more money in order to, and also not only that. Now see, if it is the festival season, now it may be Deepavali, Dasara, or it may be Ugadi, during that time what happens? The customers will need more and more of money. Why they need money? Because it is the festival season. They will go and withdraw money from the bank, and they will go and purchase, make a lot of purchases. So what you need to remember is that in case of seasons, okay, in particular seasons where a lot of offers will be provided, especially like the festival season, during those time, it is always better for the bank to have huge amount of money so that they can meet the requirements of the customers. Okay. Not only that, the nature of business condition, as I already told you, dear students, see, when the economy is very good, when the economic situation of the country is really good, you can think of, having huge amount of liquidity, because when the economy is doing well, people will definitely want more and more money from the banks. Okay. Now, dear students, I told you about the concept of safety, liquidity, and profitability. Now, what are the indicators of liquidity? Now, I told you that liquidity is nothing but a bank should have sufficient amount of cash with it. So, whenever a customer is going to demand cash, the bank should have sufficient amount of cash, and that is what is called as liquidity. But what are the indicators of liquidity? Okay. Now, how can you say that a bank is having sufficient liquidity position? Now, it depends upon the cash reserve ratio. Okay. What is this cash reserve ratio? Dear students, cash reserve ratio indicates the liquidity position of a bank. Cash reserve ratio identifies the ratio of cash a bank has to keep with itself and with the Reserve Bank of India to the total deposits. That means to say, dear students, see, always remember, a commercial bank will have to keep a certain percentage of money with itself, okay, and also with the Reserve Bank of India. Why it has to keep a certain percentage of reserve? Why? Because if it keeps a certain percentage in the form of reserve, whenever there is an emergency situation, they can always make use of that money. So any commercial bank for that matter, it should be having sufficient reserves with itself and also with the central bank, that is the RBI, so that whenever there is an emergency situation, they can always think of making use of that money. Currently, the cash reserve ratio is fixed at 4.5%. Dear students, coming to the next indicator of liquidity, it is the liquidity ratio. So, as I already told you, see, liquidity refers to the measure of cash and other assets. Okay, so the bank should have sufficient cash. They should also have some. I was telling you about the money market instruments, right? So, even if the bank has money market instruments, it is of no problem, because see, let us say the bank has purchased treasury bills. Okay, now the bank has purchased some securities. So if it is in a position to sell it back and easily convert it into cash, then it means to say the bank will have sufficient liquidity. So please remember, dear students, if the bank should have sufficient liquidity, it means to say that it must have sufficient amount of cash with it in order to meet the demands of the customers. Okay, that is very, very important. Apart from that, dear students, again you have one more indicator of liquidity. So there is one more concept which shows that the bank is having sufficient liquidity, and that is called as the loan deposit ratio. What is this loan deposit ratio? Let us see what it means. Yes, loan deposit ratio. Now, dear students, loan deposit ratio is the ratio between the bank's loans and deposits. Yes, definitely. Now, there will be a ratio between what is the loans that has been provided by the banks to the customers and what is the deposit that the bank is having, okay, from the customers. The ratio will be expressed in a percentage term. If the ratio is less than 1, okay, that is, dear students, if the loan to deposit ratio is less than 1, it means to say that the bank relied on its own deposit. It means to say the bank has its own deposits in order to make payment, okay, to the deposit holders. So what they're trying to tell is, see, any bank will be having loans and it will also be having deposits, okay, and if the ratio of loan to deposit is less than 1, it means to say that the bank will rely on its own deposits in order to provide loans to the customers. That means to say the bank is having sufficient deposits. It may be fixed deposit, savings deposit. It is having sufficient amount of deposits in order to provide loans to their customers. Okay, without it need not borrow from outside. But if the ratio of loan to deposit is greater than 1, it means to say that the bank has to borrow from outside if it has to give loan to its customers. So that is why it means to say that the loan to deposit ratio, if it is less than 1, it is ideal for the bank, which means to say that the bank will be in a position to provide loans to the customers out of its own deposits that it has with the customers. Okay, so that is again another point. And dear students, talking about profitability, I already told you that profitability happens to be one of the very important objectives of a bank. Okay, so as a bank, it is a financial institution. Its main aim is to earn more and more profit. Okay, of course, earning a sufficient profit is very important for a bank, okay, and a prudent bank will have a balance between. Now if you say that the bank is performing extremely well, then there should be a balance between liquidity, profitability, and solvency. Okay, so as I told you, it is very essential for the bank to think about liquidity. It should have sufficient profitability, and it should also be a solvent bank. Solvent means it should be in a position to repay whatever money it has borrowed from outside. Okay, now dear students, when it comes to profitability, now how exactly a bank will be in a position to make profits? Just a minute. Okay. Now I was telling you about the loan deposit ratio, and I also told you that. So whenever you talk about a bank, it should have sufficient profitability, it should have liquidity position, it should have solvency position. All that is very important. Okay. Now, yes. Now, coming to the profitability concept of a bank, dear students, see how a bank will be in a position to earn profits. Can you tell me? So, whenever a bank wants to earn profit, the main route through which it can earn profit is through lending operations. Okay, that means when a bank is able to lend money to the customers, when it is able to give loans to the customers, that time what will happen? Now see, let us say I go and I want a loan from SBI. When I go and apply for a loan with SBI, SBI will give me a loan, and every month I will be paying them equated monthly installment. Now you know that that equated monthly installment will also include a percentage of interest. Every month I have to pay interest for whatever loan that I have borrowed. That interest itself happens to be, a profit for the bank. So please keep in mind that lending operations, that means to say a bank will be in a position to earn profit. One is through the lending operations. Whenever it is in a position to provide more and more of loans, okay, that time it will be able to earn sufficient profits. Okay. Yes. So it will be in a position to make sufficient profits. And then, dear students, you have the investment policies. That means to say, see, a commercial bank must invest in shares, debentures, mutual funds. Okay. Now you know that the bank will be having sufficient amount of money. Apart from, accepting deposits, lending loans, they will also be having some surplus money. What the bank should do, the bank should be in a position to invest that money in the shares and debentures of different companies. Why? Because now if a bank is going to purchase the shares of a particular company, whenever that company makes a profit, they will be giving a share in the profits in the form of what? Dividend. So dear students, please keep in mind, one of the ways by which the a bank can make profit is of course by lending operation, by providing loans to the customers. The next one is they can also think of investment activities. That means to say that they can also think of investing the money in the shares and debentures of different companies. That will also definitely help a bank to earn profit. Not only that, you have utility services. Now dear students, I was telling you in the last class itself that the commercial banks will be performing a number of functions. So because they are performing a number of functions, what is going to happen? So now, for example, I told you we can give instructions to the banker to collect our dividend. We can tell them to make payment of our insurance amount premium. We can tell them to make a passport, to make our passport ready. So when we give such instructions to them, they are providing us some services. So for whatever services the bank is rendering, they are going to charge a fees. So with the help of that fees also, the bank will be in a position to earn profits. Okay. So dear students, please remember, any bank for that matter, it will be in a position to earn profits mainly by providing loans to the customers. Again, it will be in a position to make investment. If it invests money in the shares and debentures of the company, that will also be very beneficial. And apart from that, it can also think of providing services to the customers. And of course, as and when it provides services to the customers, it can charge some fees, and that fees will be a very good profit for that or bank. Okay, so from that fees also they can earn a profit. Now dear students, I told you that bank, for any bank, earning of profit is very very important, as I mentioned to you. But there are situations wherein a bank is not able to make profit. What are the reasons for that? For example, bad debts. I think you people have heard of bad debts. Okay, so that means to say there are many people who have obtained loan from the bank, but they will not be repaying the money in the form of installments. So, whenever the customers are not in a position to repay money to the bank, what will happen? It becomes a very big burden for the bank, and will that itself will create a problem, and the bank will not be in a position to make a profit. So one of the reasons why there is low profitability or less profitability for the bank is that it is because of the increase in bad debts. And bad debts is nothing but, students, it means to say that the the bank has provided loans, and if the customer is not in the position to repay that money back, it becomes bad debts. Okay, And on the other hand, now see, now the bank would have given lot of loans to the sick industrial units. Okay, a sick industry is nothing but, let us say there is one industry which is not in a position to earn profit for more than past 4 or 5 years. Now, if a bank has provided loans for such of the industries, what will happen? Definitely, those industries will not be able to repay the money back to the bank. So even in such a situation, the bank will not be in a position to make sufficient profit. Okay. So please keep in mind that some of the reasons for low profitability of a bank, low or less profit, is one is, as I told you, bad debts happens to be one of the reasons. The second one is they are not in a position. Okay, now they would have given loan to sick industrial units. Those units have not returned the money back to the bank. That may also be a reason. And then sometimes what happens, merger of small banks with the big ones. Okay, so you might have heard every now and then mergers and acquisitions take place. So even when the merger takes place, there will be chances that a bank will suffer huge amount of profitability. And not only that, dear students, see, today you know that there is so much of competition. Now you have competition from the private sector banks, right? Now earlier the number of private sector banks was very less, but today what is happening, the number of private sector banks is more in number, and they are competing with the public sector banks. So that may also be a reason for low profitability of the banks. Okay, and the increase in frauds have been increasing today. And not only that, okay, the employees are not getting sufficient training. No. Pooja, slides change ಆಗ್ತಾರಲ್ಲ. ಹ್ಮ್. Okay, so actually, as I told you, because of the private sector enterprises coming in, so the public sector companies are facing a lot of competition as such. Okay, so these are some of the cases for low profitability of the bank. So, what steps should be taken by the bank in order to increase the profitability? So, they have to think about, see, today you might have heard that banks will provide so many services. Like, for example, they will be providing the merchant banking services are there, factoring. Now, all this you have as a separate unit in your IFS. So, what you need to do is, banks are providing mutual funds. Now, SBI itself will be providing mutual fund services, they will be providing factoring services, they will be providing merchant banking services. All these we will discuss when we go to those topics. So, with the help of these services, the banks can think of increasing the profits. Okay, and not only that, the bank should supporting the weak public sector through budgetary. Now, what these banks should do is, although they know that there is a lot of competition from the private sector, even the public sector banks should try to come up with, very innovative services to the customers, better services to the customers. Okay, so that the customers will be in a position to, so the customers will not be in a position, the as I told you. So once, in case the private sector banks give better services, even the public sector banks also should try to provide better services. Okay, through those better services, they will be in a position to increase the profitability. Okay, and not only that, dear students, new technology, very very important. Now, see, for example, there are some banks which may be providing e-commerce facilities, whereas some banks may be still making use of the outdated technology. Now, in case the outdated technology is being used, what is going to happen? Definitely it will not be possible, okay, for the banks in order to prosper. So, if the banks have to prosper, definitely they have to make use of advanced technology in order to, attract the attention of the customers. So, as and when they are able to provide better benefits to the customers, they will be in a position to earn profits. Okay, so dear students, I hope you are understanding about these concepts. So I was telling you about the liquidity, profitability and solvency position of a bank. Okay, now dear students, this happens to be again a very important concept from your examination point of view. That means to say, you need to know that liquidity and profitability, solvency All these go hand in hand. A bank should take up thorough responsibility to have sufficient profits. It should maintain sufficient amount of cash to ensure liquidity, and it should be solvent. That means to say the bank should not become bankrupt. Okay, so it must be having sufficient management of funds in such a way that the organization or the bank can prosper. Okay. Dear students, now let us go to the next concept, which is very, very important from your examination point of view. Okay, what is that? It is about the Reserve Bank of India. Yes, dear students, you can definitely expect one question, okay, on Reserve Bank of India, which is a very, very important component from your exam point of view. Just a minute, let me try to reload the presentation. Yes. Okay. Let us start with the Reserve Bank of India, Unit 6. Dear students, very, very important from your examination point of view. So you can always expect a question on commercial banks. That is, what are the functions of commercial banks, okay? And what activities are performed by commercial banks. And apart from that, Reserve Bank of India happens to be one of the very important concepts from your examination point of view. So when it comes to the Reserve Bank of India, now, all of you know very clearly that Reserve Bank of India is, the apex institution which is going to control the financial activities of all the banks. All the commercial banks, all the banks come under the control of the Reserve Bank of India. So, all of you please keep in mind that the Reserve Bank of India is playing a very, very important role. Okay, as it is the apex financial institution. Just a minute. I think, yeah, Reserve Bank of India. Yes. Dear students, RBI, okay, that is the Reserve Bank of India, is the central bank and a regulatory body. That means to say, Reserve Bank of India has taken up the responsibility of giving strict supervision, strict rules and regulations for all the commercial banks in the country. So all the commercial banks, okay, they have to strictly follow whatever rules and regulations have been given by RBI. It is under the ownership of Ministry of Finance, Government of India. So what is the responsibility of this Reserve Bank of India? Just now, as I told you, see, it has to take care, it has to supervise the activities of all the commercial banks. See, the commercial banks cannot think of performing the activities according to their own will and wish. No, because there is a governing body which is called as the Reserve Bank of India, and this governing body plays a very important role in giving strict rules and regulations to all the commercial banks. And not only that, dear students, see, a Reserve Bank of India has the sole responsibility. That means it is the only regulatory body which has the responsibility of issue of currency notes. Okay, so issuing the currency notes which we people are using on a day-to-day basis will be done by the Reserve Bank of India. So Bharatiya Reserve Bank Note Mudran, okay, is a specialized division of the RBI, and it takes up the responsibility of printing of currency notes. Now, dear students, coming to the most important concept of RBI, please remember you can always expect a question on functions of Reserve Bank of India, and it can be asked either for 10 or for 15 marks. So, whenever there is a question, please remember, as I've already been telling you, whenever you have a 10 or a 15-mark question, always start the question with an introduction, write the points along with the explanation, and you also have to write a conclusion. Apart from that, dear students, you can make use of diagrammatic representation wherever it is possible so that the effectiveness will be good. Now, for example, when it comes to the functions of Reserve Bank of India, dear students, you have three subdivisions under that. So what you can do, you can always draw a chart. Okay, in the center you can write it as functions of Reserve Bank of India. Draw a flow chart, showing three arrows. So the first arrow will indicate the traditional functions. Then you have the development functions, and then you have the supervisory functions. Okay. Now, coming to the traditional functions of Reserve Bank of India, as I already mentioned to you, if there is a question about RBI, which is a very important concept, you people should start with an introduction telling that Reserve Bank of India is the apex bank of our country, and it controls all the banking services in our nation, and it was started in the year 1935. And then you start with the flow chart showing what are the functions of the RBI. And firstly, you have the traditional function of RBI. Okay, let us look at this traditional function of RBI. Yes, just a minute. Yes. Traditional functions are those functions which every central bank of a country, okay, now, any central bank of any country, they will be having the responsibility of performing certain functions. Those are called as the traditional functions. Of course, here in India, RBI is the central bank. For different countries, they have different central banks, but for India, it is the Reserve Bank of India. Dear students, the first very important traditional function of the RBI is issue of currency notes. As I already told you, the RBI has the sole authority. That means only the RBI has the monopoly authority of issuing currency notes. So the currency notes, dear students, which we are using every day, those currency notes will be issued exclusively by the Reserve Bank of India. Okay, so no other commercial bank or no other secure authority has the responsibility of issuing the currency notes. The issue of currency notes will be done only by the Reserve Bank of India. Now, the next point, dear students, banker to the other banks. That means to say, as I already told you, that Reserve Bank of India is the most superior banking authority. But when the commercial banks are in need of money, now let us say all of a sudden one particular commercial bank is having shortage of funds. Now you know that bank means they should have sufficient amount of funds for meeting the requirements of the customers. Now let us assume that one particular day a commercial bank is having less amount of money with it. From where can that commercial bank borrow money? Yes, definitely that commercial bank can think of borrowing money from the Reserve Bank of India. Okay, remember that. So, dear students, RBI is the banker's bank. That means, first of all, commercial bank itself is a bank, but RBI will act as a banker to the bank. Okay. So, whenever any type of commercial banks have got any type of financial crunches, financial problems, they can definitely go and approach the Reserve Bank of India. Okay, and that is why, first of all, it is mandatory. I was telling you about the reserves that the banks have to maintain. So please keep in mind, every commercial bank, that is why they keep a certain percentage of reserve. That means some amount of money they have to compulsorily keep it with the Reserve Bank of India to meet such emergency situation. Whenever there is a shortage of funds, whenever there's an emergency situation, definitely the commercial banks can approach the Reserve Bank of India. Okay, so remember that. So that is why the first important function, which I already mentioned to you, is issue of currency notes. The next important function is banker to the other banks. Okay, that is another important function. Next one, banker to the government. Okay, that is another important concept. Banker to the government in the sense. Now, see, look at the authority of RBI. RBI is not only an institution which is providing financial assistance only to the other banks, Rather than that, they are also acting as a banker to the government of India. So, RBI being the apex monetary body, it will provide financial assistance even to the government. Okay. Now, don't think that the government will not be having financial crunch. Even at certain times, the government will also be in need of financial assistance. Okay, whenever it has financial deficit, they can always approach the Reserve Bank of India. So, dear students, RBI also plays a very important role by acting as a banker to the other banks and also by acting as the banker to the government of India. Okay, so it can also provide some overdraft facilities to the government. Okay, I told you about overdraft, right? So even that can be done. And apart from that, exchange rate management. What do you mean by this exchange rate management? Dear students, you know very, very clearly that every day financial transactions will be happening and currency conversion will also keep taking place. Okay, now, there should be a stability in the exchange value of rupee. That means to say, see, every day when you look in the newspaper, they would have given you what is the value of Indian rupee when compared to the US dollars. Okay, so what is the worth of Indian rupee when compared to US dollars or when compared to some other country's currency? Please remember there should not be a lot of disparities in the value, okay, of Indian currency with that of the foreign currencies. Okay, so in order to maintain that particular stability in currency, RBI plays a very important role. So dear students, please keep in mind, Reserve Bank of India, which is the central bank of our country, which is the apex bank of our country, it plays a very, very important role by performing some traditional functions. Which are the traditional functions? Of course, I told you it has the sole authority of issuing currency notes. It also acts as a banker to the other banks. It acts as a banker through the government. So that is, the government can also take the assistance of Reserve Bank of India, and also it helps in exchange rate management. So as I told you, exchange rate management is nothing but the value of the Indian currency. It should not fluctuate to a greater extent. There should be stability in the Indian currency over the other countries' currency denomination. That work will also be done by the Reserve Bank of India. What is the other function that is performed by the Reserve Bank of India? Let us look into the next function. Just a minute. Okay. So we were telling that the functions are traditional, development, and supervisory. Now, under the traditional functions, we also have credit control function. Dear students, this credit control itself can be separately asked for 15 marks. But as of now, I will just tell you what is the meaning of credit control. Okay. Commercial banks in the country, they are going to create credit according to the demand in the economy. But if the credit creation is unregulated, it leads to inflation. Dear students, please keep in mind, whenever it comes to the concept of credit control, okay, see, there should not be too much of money supply in the economy. All of you please understand this. See, all of you might have heard of the word inflation and deflation, right? So whenever during the period of inflation, what will happen is there will be the prices of the goods will keep on increasing. In the deflation, the prices of the goods will be little less. But actually speaking, this inflation and deflation will depend upon the supply of money in the economy. So please keep in mind, if there is too much of money in supply, that will also prove to be very poisonous for the economy. On the other hand, even if there is shortage of cash, that will also prove to be a very big problem in the economy. You can say it is a stagnant economy. For that, Reserve Bank of India plays a very important role for controlling the credit. Now, dear students, when I explain to you about the credit control methods adopted by RBI, you will come to have a complete clarity of what do you mean by credit control. As of now, just understand that the RBI plays a very important role in controlling of credit. It sees to that there should not be too much supply of money in the economy, and on the other hand, there should not be too less supply of money in the economy. And not only that, dear students, it also supervises the banking activities. That means to say, any bank, now let us say a new bank has to be set up, they have to definitely take the permission, they have to take the license from the Reserve Bank of India. So, dear students, please keep in mind the Reserve Bank has the responsibility of supervising the entire banking system in the country. Okay, if a new bank has to be set up, or in case they're thinking of expanding the branches, all the inspection of all the activities of the different banks will be done by the Reserve Bank of India. Dear students, let us go to the next point. This is about the developmental functions. Okay, fine, just a minute. Yes, the development functions of Reserve Bank of India. So, under the development function of Reserve Bank of India, once again, just a minute. Yes, development function. So, development of the financial system. What are the developmental functions of the Reserve Bank of India? The financial system consists of financial institutions, markets, instruments, right? Now, for the efficient functioning of the Indian financial system, first of all, RBI plays a very important role, okay? Because you know that without a bank, you cannot have a financial system itself. I was telling you, every day we need bank to carry out our day-to-day activities. And imagine that the Reserve Bank of India is trying to supervise the activities of all these banks, because of which it is helping in the development of the Indian financial system. Not only that, dear students, please remember RBI is helping in the development of our agricultural sector. As all of us know very clearly, agriculture happens to be the backbone of our Indian economy. You know that in our country, more than 60% of the population depend on agriculture for their livelihood. But what RBI has done, it is providing special attention to the agricultural sector. Okay, so the RBI is providing lot of financial assistance. Credit is being provided to them. Okay, like for example, see, you have the regional rural banks. Dear students, I was telling you, regional rural banks are the banks which are basically existing in the rural areas. They are providing credit to the farmers. They are helping them to purchase whatever equipments are required for carrying out the agricultural activities. Okay, so please keep in mind, what is that, RBI is playing a very important role in seeing to that credit facilities is provided for the development of agricultural sector. Dear students, I think you have also heard about NABARD, that is National Bank for Agriculture and Rural Development. We also have the Agriculture Refinance and Development Corporation. Now, all these institutions are also governed by the Reserve Bank of India. They're trying to provide as much credit facility as is possible for the agricultural sector. They're providing loans to the agricultural sector so that, okay, the agricultural sector can develop. Okay, and then provision for industries. Now look at this, dear students, as I already told you, please keep in mind, although India is an agriculture based agrarian economy, you know very clearly that Sir M Vishweshwaraya clearly said that industrialize or perish. That means to say, if your country has to develop, there must be more and more number of industries that should be set up. Only if you have industries, you can give employment opportunities to the people. Only if you have industries, you can think of manufacturing the goods and services. Only if you have industries, you can buy the goods and services, right? What is available in the society. So, dear students, RBI is playing a very important role in the development of industries. Okay, so you know that many institutions are there. For example, ICICI is there, IDBI is there, SIDB is there, Exim Bank is there. What are all these banks doing? They are also providing lot of financial assistance for the industrial sector. So, dear students, please keep in mind RBI is playing a major role in providing finance for the development of the industrial sector. So, as I mentioned to you, industry is the backbone of the economy. So, micro industries should develop, small industries should develop, medium scale industries, and large scale industries. All of them have to simultaneously develop. For the development of all these industries, RBI is playing a very important role. Not only that, dear students, RBI is providing regular training to the staff. Okay. Now, please remember, see, there is so much of advancement in technology. That means to say, see, the banking facilities that was there 5 years back and what is there now, it's very different. Why? Because most of us are going for mobile banking, we are thinking of internet banking. Okay, so we are making more use of ATMs rather than going to the bank itself. So what you need to remember is, as and when there is a change in the technology in the banking sector, first of all, the employees in the bank, they should be provided proper training, because they should first of all know what is happening. Only then, if they have sufficient training, they will be in a position to give better facilities to the customers. So, dear students, RBI has made arrangements. Okay, now there are some institutes like the National Institute of Bank Management, Banker Staff College is there. Okay, now these institutions are playing a very vital role in providing training facilities to the bank employees. Okay, so every now and then they are providing financial assist, I mean, sorry, they are providing them with the training programs, so that the staff will be well versed with all these what facilities they are providing in the bank. So only if the staff have been well trained, they will be in a position to provide better services to the customers. Not only that, dear students, the RBI collects lot of information. See, for example, there will be some bulletins or some publications that will be made by the RBI. If you look at that, you will come to know what is the present rate of interest, okay, that has been there on savings account, fixed deposit account, or for housing loan, what is the rate of interest, for the vehicle loan, what is the percentage of interest. Okay, so all these informations will be collected by the Reserve Bank of India, and every now and then they are going to publish it. Okay, so RBI annual report publications will be done, and these reports play a very important role. Now, as a general public, I can make use of this particular information. Okay, so I can make use of this particular information. So RBI will give weekly reports, annual reports will be published by them, so that the customers will get complete information about what are the different facilities provided by the banking sector. Is there any type of new services that the banking sector has been providing? And RBI also plays a very important role in promoting the banking habits. Yes, of course, dear students, it is very, very essential for us to encourage banking habits among the customers. So what RBI does is it tries to encourage the people to to save more and more of money, because only when there is savings and investment, only then your financial system can be sound. You can have a sound financial system. That is why, as an apex institution, the Reserve Bank of India tries to promote banking habits in the country. It tries to encourage people to save money, it encourages people to invest money, and it encourages people, okay, to always be in the mainstream of the banking business, so that they will be in a position, okay, to keep the Indian financial system stable. Not only that, dear students, RBI also plays a very important role in promoting foreign trade. Dear students, we will be getting huge amount of revenue, as I was telling you in the earlier classes. When we export goods to the other country, we will be in a position to earn a huge amount of revenue. But for, first of all, for the trade activities to take place, there is a need for promotion of export. Who is doing that? The RBI takes up the responsibility of providing financial assistance for foreign trade. Okay, you have the Export Import Bank of India, you have the Export Credit Guarantee Corporation of India. They are providing a lot of financial assistance. Okay, for improving the export. Okay, and then supervisory functions of the Reserve Bank of India. What are the supervisory functions, dear students? See, they grant license to the bank. As I told you, the banks cannot, perform according to their own will and wish. So they have to obtain a license from the Reserve Bank of India. Okay, so that is granting of license to the banks is a very important supervisory function. Then bank inspection, every now and then Reserve Bank of India will see to that the banks have been performing the activities in a very systematic manner, and they will also have a control over the NBFCs. Now we have the non-banking financial institutions, so those activities will also be controlled by the RBI. And they also, RBI is also taking up the initiation of deposit insurance scheme in order to protect the depositors. Okay, so that is this is about some insurance scheme which has been encouraged by the Reserve Bank of India. Dear students, so that is about the functions of Reserve Bank of India. Very important for your exam point of view. So what you can do is, if there is a question about the functions of RBI, kindly draw a diagrammatic representation mentioning about the traditional functions, mentioning about the development functions, and mentioning about the supervisory functions. Okay, thank you, Anna.